Hey, good morning, everybody. As you can see, Mark Carney still saying, I don't know what's going on, eh? Lots going on. Nothing's going on in the UK. The Bank of England just said, I don't know what's going on. I feel bad. I feel bad for Carney because he's been working hard the last, I don't know how long has it been now, 4 years or something, and they keep getting inflation and something happens. Like, he didn't create Brexit, right? So England, by the way, the UK, I don't know what it was 3 years ago. I can't remember, but I was very, very bullish on it. There was a lot of good things happening based on the economic data in the UK. The IMF is really starting to give them a thumbs up, and they were raising their forward guidance for future GDP levels of the UK. And I was actually quite bullish. And then Brexit came along. And so then the pound tanked, as you know, and that creates some sort of inflation. And like other economies, the United States, Eurozone, and all that kind of stuff, it seemed like maybe that inflation was going to lead to more economic activity and all that kind of stuff. But it seems like in the UK and also in Europe, but in particular, since we're talking about the Bank of England, in the UK, things have slowed down a lot, and that could change everything. And maybe it has changed everything. So the Bank of England was supposed to come out and say no interest rates, no rate hike today, but lots of good things are happening. And that didn't happen today. He's like, hey, man, we're not raising interest rates, and we're data dependent. What does that mean? When someone says data dependent. Well, they kind of know, Freddie, by deduction they know. Come on, guys. When the head of a G10 central bank tells you something, I need to know that you know what kind of decisions to make as a currency trader. What does it mean? It means they don't have the data. If they had the data, they would have raised interest rates. They don't have the data. Things are not good in the UK. So let's say next month or next meeting, so in 6 weeks, do you think the data is going to be so dramatically better that they're going to actually start raising interest rates? The data is great. Still not enough time, right? Because the central banker is going to be cautious. So if not next meeting, then when? If data improves. Do you think they like to raise interest rates in the middle of the summer when no one's around? Not just no one at their bank, but what about all the other banks in around the world that need to adjust things like their hedges and all that kind of stuff because of their risk exposure to the pound and all that? September at best, but probably more like November. Don't you think? Maybe by the end of the year. Maybe. I think September is, if they're going to go in November, then in September they're going to tell you they're thinking about going November. They're going to say, like, we're starting to see signs in the data, blah, 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 blah. That would be the clue, right? You guys got me on that? Capiche? Yeah. So, boo-hoo for Carney. Oh, for sure, eh? So, hey, let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. Nice to meet you. I am the Chief FX Market Strategist for TradersWay. Please feel free to ask me questions about technical analysis, fundamental analysis, trader psychology, monetary policy, central banking theory, how to scalp, how to spot, how to swing, how to carry trade, multiple time analysis, intermarket analysis, analysis of commodities and commodity futures, all that kind of stuff. I'm here to help you succeed. I'm a resource to you. You're either a professional or you want to be a professional trader one day. So I'm kind of like either your quant that gives you sort of inside the data information, or maybe I'm just that creepy old man that helps you raise money every once in a while. And you're like, hey, I might be a young trader, but I got this creepy old guy. He's been around. And they're like, cool. So whatever you want, man, I'm here for you. Do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. How we did between scalping and spot trading. Okay, great. Well, we'll just jump into it. Andrew says, what's the difference between scalping and spot? Scalping, I make a decision on a 5-minute chart or 1-minute chart. And I'm in it for, let's say, an hour or less. A spot trade, I'm typically day trading, and I'm typically in it for a session, maybe 2, but most likely just 1. And that's where I trade like the London Open or the Shanghai Open or the New York Open. And let's say New York takes it up for 50 or 60 pips, so of that I get 30 to 50. Okay. Barry says he only does spot trading in his practice account. Cool. And is that hugely profitable for you, Barry? Demo? Are you getting the pips demo-wise? Yeah, good. Now, what we talked about yesterday was how to spot trade, how to day trade, basically, right? And what I showed you, I think it was a pound trade, wasn't it? This is yens. Oops. And what I said is I showed you how you take your long-term bias. Okay. You take your long-term bias and then on a daily basis get yourself in and out of trades. And maybe it was this one. Okay. And I was showing you how you're predominantly down, so your long-term bias is down. So on a daily basis, you're taking sell trades. Very often they overlap with session opens like Shanghai, London, or New York. Oh, sorry, I didn't click. No, I need to click that. My bad. So what I was telling you is that what we covered yesterday, so we don't have to spend much time on it. Even if you're day trading, you're looking at something like this. And so on a daily basis, that's a long-term trend that's been happening for a few weeks. So when I'm day trading, I'm typically taking shots like I would sell there, I would sell there. This is probably sellable. That's a little too high. This one's sellable. That one's sellable. That one's sellable. That one's sellable. You know, and I'm doing this on a daily basis. Those are typically my spot trades. Okay. Even though I might be swing trading this, right? I'm also day trading it. Now, what about scalping? Well, why would I scalp if I thought I was going to make 100 pips or more per trade? I mean, I can show you, and I've done it in the past where I take a scalp and I make 100 pips. Take a scalp, make 100 pips. And it wows all the kids, right? All the kids love it because they're used to picking up 8 pips when they scalp. So I'm like, look at me, I'm on a 1-minute chart. Boom, scalp 100 pips. It makes me look good, but it's just because my trade plan's better. That's all. I enter on a 1-minute chart, so it looks like a scalp. It's not really a scalp. It's a spot trade on a 1-minute chart because I've set it up on the higher time frame. But when do you truly scalp? And maybe when you're at extremes, like this one, it's okay. This one, you can see, certainly would have made 30 or 40 pips. This is a counter trend trade. No, that may have offered a small one. This may have offered a small one. This one, you can see that you would have made 50 or 60. Here's another counter trend. Okay. And so those, I would probably scalp when I don't feel comfortable spotting. Okay. Hey, by the way, great question, guys. Just tons and tons and tons of great questions. Thank you. Oh, okay. How do you decide, or how do you determine the strength of support and resistance? Well, it's going to be your interpretation, first of all, right? It's not like you could look it up in a book. You're like, oh, it says here, this one's super strong. So if your bias is down, okay, you believe resistance is the strongest and support is the weakest, okay? So you're not going to believe most supports because that's why you're selling retracements, because you believe that support will break. The next thing would be, confluence. Okay, is there a monthly pivot? Is there a weekly pivot? Is there a daily pivot? Is there a psych level? Right? Is there price action? Meaning, if you're looking at support, was it support 3 weeks ago? Okay, so what if you saw support or resistance that had much of this all kind of clustered near one spot? How would you determine that that's strong support or resistance or weak support and resistance? Yeah. And so, like, well, how strong? That's very subjective, right? And which pivot? What if it's a monthly R1? Is that going to be strong resistance or weak resistance? Well, John says monthly pivots are, no, they're all the same, John. Right? Make sure you don't talk yourself into stuff, right? No, it's not strong, guys, but it's not weak either. Trick question. It's somewhere in between. Like, who cares about monthly R1? The only time you care about monthly R1 is when you don't have a trend. But you can't ignore it, but it's not that important. What about MR2? What's my rule for MR2? Always, 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 100% of the time, without fail, you always take profit at MR2. What about MR1? I don't really care. That's why I pick on whoever said it just a few seconds ago about, oh, well, monthly pivots are very strong. Well, no. Right? It's like a high-powered weapon, but with no ammo. Yeah, well, tend not always. Well, but I'm just saying what matters more, John, is the cluster of things going on. It's not just the monthly pivot, because what you'll see, and this happens a lot, guys. Let's say this is the monthly M4, MM4, okay? We know that's a key one where you should, that's the price level in which you should start taking profit, right? But very often, what you'll see is like a weekly M4 just above it. Happens all the time. So what's going to happen? It's going to go Okay. So what? It wasn't one or the either. It was both. Okay. That's all I'm trying to get you at, right? Again, because newer traders are very, very, very mechanical based, and they're trying to grab onto something to say, if I think this way or if I act this one way, I will stop losing money, right? So I just trying to avoid this idea like, oh, monthly pivots are going to save me because they're so much more important than other pivots. That's not the message I'm trying to get you at, right? It's the analysis of multiple time frames, of multiple markets, like the dollar versus everything, not just pound dollar, right? What is oil doing? What is gold doing? What is wheat doing? What's, all this kind of stuff. That's what's important. So, yeah, Hassan says, so all pivots are equally strong. Well, how about all pivots are important? You should do your pivot point analysis. So what I've shown you guys in the past is I would, if I was forced to, like for example, let's say I was a professional golfer and the rules changed today and I can only have half as many clubs in the bag. What are you allowed now? 12 or something? So let's say the rules change, you're like, you can have 6 clubs and a putter. That's the new rules. We're going to make it more difficult. Nothing's too easy. Okay? Like, oh, okay, well, I'm going to need a driver. I'm going to need an approach iron. I will need something to chip with around the greens and from the sand, but maybe I can combine a pitching wedge with a sand wedge, so I don't need a double wedge up. So I certainly need a driver. I certainly need an approach iron, and I certainly need a wedge. Do I need a 3-wood? No. A 4-wood? Well, I can combine a 4-wood similar to a 5-wood and a 5-wood with a hybrid. But maybe I could just do the hybrid. So I'll take a 3 hybrid because I don't use a 3-wood that often. So I'll put that in. I'm starting to think like what is crucial. No, the putter you get. So if I had my approach iron being a 5, I'd also need something in between that, not a pitching wedge, not a 5 iron, like an 8. So I'll take, I'll take the driver, I'll take a fairway 3 hybrid, I'll take the 5, I'll take the 8, I'll take the pitching wedge, and I got one more. You see? So now maybe I do keep the hybrid, but I'll do a 4 hybrid, and I will take the 4 wood. And now I got my, right? So what could I trade with? Do I have to have a 200 EMA? No. Do I have to have a 55 EMA? Oops. No. In fact, do I need any of the EMAs? No. Do I need Bollinger Bands to be successful? Yeah, screw that, get rid of them. Those are all nice to haves, but they're not required. All right, so I have pivot points. Now I'm going to need daily pivot points, weekly pivot points, and monthly pivot points. Okay? Okay? So now I can do that on 3 different time frames. And the next bit is I need to know or have the ability to carry out price action. Okay. So I need to be able to say things like, this was support, right? This is support. I need to be the ability to do stuff like that. And then on the smaller time frames, this whole idea of breakout retracement, breakout retracement, breakout retracement, and I have it. Okay. So yeah, I need price action. I need the ability to use price action not only for selling retracements or buying dips, but I need price action to be able to identify support and resistance. See, right? So when I use price action to identify support and resistance, that's right. That's support and resistance of price. These pivot points, they're not based on price per se. They're priced on what yesterday's market did. What did the markets do yesterday? Oh, the markets were down. Well, how do you define that? Well, there was a higher high, there was a lower low, and the market closed lower than it started. Therefore, I define that as bearish. Oh, okay. So that is support and resistance of the market. And as you know, when I use my full toolkit, I'm combining price action with market forces. I use moving averages to do that. I use oscillators to do that, and I also use price action per se, right? Right. So there's three levels of market, and there are three levels of price action that I use in my analysis. Okay, and everything else is just helpful, but not necessary. They're not mutually exclusive. So, what did we talk about yesterday? Didn't we talk about this, even though this had been down for weeks? Didn't we talk about this, doing this? Maybe? Or at least you would start planning for something like that? Cool, right? Well, Hassan, maybe you need additional training. Okay. Look how convinced this market is. This is your daily resistance. This is your daily support. Okay. Okay. So it's pretty easy if you know if you're a bull or a bear. Carney says they're not going to raise interest rates anytime soon. Best case scenario, in my opinion, now is November. Is the Bank of England meeting, is that October or November? I thought it was late this year. 50 pips below daily support. Why not just put it below daily support? Why do you need 50 pips below daily support? Hang on, this is Mark Carney. You needed some help. I'm like, you did all right. All right, so let's go through this. Here's our target. Okay. We have it going maybe a little higher, but I wouldn't count on it this week. So now is the time to become less confident. Yeah, John, I just caught the last part of John's comment here. I think the day we stop learning is the day to get out of Forex. I totally agree with you, John. Totally agree with you. Yeah, it's funny, Freddie. Freddie says, how believable are the commitment to traders report? They're 100% believable. Yeah, I'm quite sure they're factual and not subjective. Anyways, blah, 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 blah. Now I know it's a facetious answer, but that was the question you asked. Um, Also, they're very helpful. There was a time when euro dollar was going straight up, right? I just hate having to interpret what people said into what I think they meant and then giving an answer to what I think the question was. I'd rather be critical in the beginning so that we can train each other on our language communications if we're working on a team, right? I drive everyone nuts with this, by the way. I'm like, what is it that you're asking me? I tell people that all the time. I'm just like, are you asking me to take out the garbage? Right? I don't know if your spouse does things like that. Like, do you want to take out the garbage after dinner? I'm like, no. What do you mean, no? I don't want to. Will you? Oh, yeah, I will. Totally. It makes sense. The garbage is full. But you asked me if I wanted to. No, I totally don't want to. I'd rather sit there on the deck and drink wine. That's what I would want to do. Yeah, yeah. That's why my wife hasn't killed me. I don't know, but I do that to everyone. So, anyways, what the hell were you asking? Now I've forgotten. Oh, COT. There was a period where euro dollar went up like 1,000 pips, and I could prove to you using the commitment of traders report that it wasn't people buying euro. And it wasn't just like over a day, it was a period of weeks. And based on that, it allowed me to maintain my bias on the trade and be ready to do what I actually wanted to do. In that case, short the euro dollar. Okay? But you would think, wow, euro's been going up for 2 or 3 weeks in a row. It's going up 300 pips a week. It's up almost 1,000 pips. People just must be all over this euro. No, they were not. So how could the euro dollar go up, Freddie, 1,000 pips, and yet nobody buy it? That's funny. Yeah, people were getting out of the euro dollar short position. That's how short the market was. And the bears were getting out of the market. And if they're getting out of the market, that makes the market rise. But no one was actually buying. They were only getting out of their short position. Okay? That's where it's helpful. So a lot of people are told, like, they pay money and they take a course and they're like, yeah, it says this, so you should do that. And no, that's not really how it should be used. It shouldn't make your decisions for you per se, but it is an analysis tool. Right, so if Freddie says after that, Freddie's like, huh? I don't get it. Then we just learned something. Thought getting out of short meant that they had to buy. Well, they offset, Wesley. So imagine there are a million contracts sold. Everyone is short a million futures contracts. Okay? When you decide to get out of your trade, then you say, take profit. What does your broker do? You're short. They have to offset that with a long. And it cancels, right? And it makes that neutral. So if a lot of people are doing this at the same time, the market starts going up, but it's not that people are actually buying it. They're undoing their sells. Okay? So anyways, we don't need to spend a lot of time on that. But yeah, but at least now you got something you can do some research on. Well, which is buying, right? The way the broker does it, it is a buy, but if you're short, then they've neutralized, right? But yes. Yeah. Yeah. Exactly. So anyways, you know, a lot of these things though are pitched in such a way like, oh, my fail-safe commitment to traders report, trading strategy, making $1 million, do what the big boys do kind of crap. You know, it's useful information, but it's not going to put you in a trade. Cool. So yeah, let's get to trading, huh? Okay. So here's euro dollar. Let me get rid of this triangle, this rectangle here. I think that's mine. Let's back this up. Well, you'll just have to. Oh, there. Good. I got it. All right. So the people on TV were very surprised today. But after weeks and weeks of the dollar falling, it stopped falling yesterday. And the talking heads on TV were really surprised. They're like, after weeks of dollar strength, right? Blah, 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 blah. It stopped falling. How boring. Well, let's put it this way. How exciting if you don't know what's going on. Must be very exciting to be a trader that doesn't know what's going on. It must seem like chaos. So what did we talk about yesterday and the day before? This is the cluster of weekly and monthly pivots. Right there. Did it go 1 pip below? No. Not even a pip below. We drew this X 2 weeks ago. And then yesterday or the day before, we're talking about the importance of this cluster. Okay? And then in my portfolio group, I was teaching the traders, you know, how that's a sell opportunity, that's a sell opportunity, that's a sell opportunity, that's a sell opportunity, that's a sell opportunity. But right at this area at 118.25, this is where you should really throw up the red flags, and the bear should be ultra cautious, especially if the bear suddenly sees a higher high. That's where you start thinking about head and shoulders or double bottoms, right? That kind of stuff. And that's where you should stop selling. And maybe for a bull, but we don't know this yet, and we still don't, but maybe it turns bullish, and if so, bullish opportunities start to present themselves. Okay? That's what we talked about yesterday, wasn't it? It was our group. I think we actually had it lined up where it might higher low or it might double bottom. And I think what I did is I drew this across, and someone else said, like an inverse head and shoulders. I'm like, yeah, like an inverse head and shoulders, right? So what you do with the knowledge is up to you guys. But isn't it amazing that we are consolidating? Like, even if it does fall further, after all of this move, we've now spent all this time between these prices, this price and this price. And in particular, this price here is important. Well, maybe it's because of the monthly pivot and the weekly pivot overlapping, right? We knew that this day, guys. Okay. Now, on a weekly basis, notice where we consolidated last week. Is that expected or unexpected based on your analysis last week using technical analysis? Is that expected or unexpected, this bit of consolidation? Okay. Now going into this week, the cluster of the weekly M1, let me do this in a different color here. The cluster of the weekly M1, monthly S2. Is that consolidation near there expected or unexpected? Cool. So it's expected. That's what your analysis tells us. Great. Does that tell you whether it's going to start rising or continue moving down? Do you know any of that? You expect there to be consolidation, but do you know the direction it breaks out? No. So therefore, what you have identified as a bear, a place to take profit because your risk has gone up. You don't know if it's going to continue or not. Now, looking at this, you're probably, on a weekly basis, you probably say, well, the target is down there. Okay? But now that we're here, you certainly don't know. So you definitely should take profit. And maybe if you're a bull and haven't had too many opportunities, this might be yet another opportunity to, right? But you're not really confident yet. Okay? So you can see like a bear could take profit in this area, but their ultimate target is here. So once you get to the ultimate target, are they confident it's going to fall further? No, you just hit your target. Like, confident about what? Confident that you should get out and walk away. Okay? So anyways, I love smiling in the shower. I typically cry in the shower. But today I was smiling because on Bloomberg, they're like, wow, dollar weakness comes out of nowhere. And I'm like, yeah, it comes out of nowhere. We only talked about it for 2 days. And suddenly, wow. The good question, is it a good idea to buy with a tight stop loss in case it, wait, that's weird. A good question, is it a good deal to buy with a tight stop loss in case it goes bullish? You mean enter with a limit order? I like to make the decision. Okay, so I don't even think, it took me a while to translate that. To throw a limit up there is like saying, well, if it breaks, I guess it's going up, so I guess I should be in it. What I'd rather you do is say, excuse me, what I'd rather you say is, I think it's going to go bullish, so I'm going to buy at support. See, by throwing a limit order above price to buy means you, by definition, you're buying it high, which is like the exact opposite of what I want you to do. All right? And what you're, right? It's kind of like your London breakout strategy. You're like, hey, London's been falling for the last 2 hours. I guess now I will sell. Why didn't you sell 2 hours ago? You know, it's like, if it busts to the upside, then I'll have a limit up there. And so then I guess now I'm in because I guess it's going to go up. It just doesn't sound right. It just doesn't sound like you're in control. Okay? So I'm going to tell you not to do that, Hassan. Okay? If you think it's going to go up, buy low. So in this case, kind of, let's see if I can use a drawing tool. So ignore all my charts here. You know, you have support and resistance. What you're saying is, should you have a limit order up here so that if price breaks above, you're long? No. I want you to buy at the exact same price, but I want you to buy a dip. And I want you to say, oh, look at that. We've busted out. We've made a higher high. So therefore, I'm going to buy a higher low. I'm going to look for a role reversal retracement type scenario. I don't want you to make that. I don't want you to do that down here and say, I'll put a limit order, right? I'll put a limit order here. So if it busts out, I will go long. That's not, because you're not in control. You're doing like, if it breaks out unexpectedly, should I be long? You shouldn't be long if you didn't expect it, right? Remind yourself, guys, right? Remind yourself, you only trade things that you expect. If it's a surprise, you don't deserve it. So if you expect it to reverse after it broke out, and you expect it to bounce at the roll reversal, I want you in here, okay? What you should be doing is, let's say price is doing this and doing this and doing this, and you say, I'm going to buy here because I think it's going to go to resistance, but it might actually break out for whatever reason you believe it's going to break out. So I'd rather you be long here as a first entry, and I'd rather you be long here on a second entry. You can use limit orders and stop orders to get into these trades, but don't use it to like get into a trade after the fact. You should always be before the fact. So like, for example, I'll do in this area here, look at this box to the left. Okay? Let me use black as a color here. When I'm in this position, I want to sell. Do I want to sell at that price? No. I do know that I want to sell in this area somewhere. Okay? Now I'm still in the X. Nothing to the right has happened yet. I just look left, find out the old support. Plus, I'm also looking at this high to the current low on the X, which means I'm constantly drawing pivot points. And I can see that's approximately 50%. So what I'll do is here, because this might be an hourly chart, not just or it is an hourly chart. So I don't want to sit here for 9 hours, but I'll say, oh, I'll put a working order here to sell, and I'll put parent and child OCO, so that I'll have a stop above here, and my limit's going to be based on how many pips this is. So if this is 50 pips, so I might say, well, just drop a stop around 100 pips, so my target's going to be around here. Okay? And that's the only time I enter it, but you see how I'm entering it with a plan ahead of time? I'm not saying, look, if it breaks lower than this, I want to sell. No, because I've already given up 50% of the potential. What I say is, when I'm down here, if it retraces, I'm going to sell high, expecting it to fall, and my stop will be there. So it's the mechanics are the same, but the mentality is completely different. Okay? Yeah, so yes, in that case, your stop is below. Yeah, you said buy and above. Yeah. But yeah, it was good. Yeah. Okay, another good question. What is this? If the trend is down, okay, it's down, how do I estimate the best price to sell at a pullback? I just answered that. Okay, that's exactly what I just said. Now, for me to, maybe you need me to zoom in here, which means I got to go back to the right. That's just price action. So Pravish, if you don't know price action or trend trading or swing trading, all that kind of stuff, maybe you want to visit FX Boot Camp, because these are all pretty basic questions, guys. They're good questions, but you really do need to know these things, right? Like, how do I know what's a good price to sell in a downtrend, right? Yeah, I mean that's like, how do I know what letter comes after D in the alphabet? Like, oh, well, it's E. Well, how'd you know that? Oh, well, I simply memorized the stuff, right? A, B, C, D, E. So it's not that it's a bad thing. It's that you really do, if you're going to learn how to read and write, you're going to need to know this alphabet stuff. It's just something that you need to go through, right? So anyways, so you're going to, that's where Fibonacci comes in. That's where price action comes in, all that kind of stuff. Yeah. Well, then go to the library. I mean, it doesn't matter who teaches you, Hassan. You just need to know. Now you know you need to know, right? So get a job, sell something, go to the library. I stopped doing like the conferences. Like I used to go to 5 or 6 or 7 conferences a year. I used to sponsor them and stuff. I stopped going because they end up all being sales pitches that other people are doing. And I'm like, this sucks. If I was in the audience, I would say this sucks. So I stopped kind of doing them, maybe because it was so ridiculously expensive to go to these shows. I'd drop 100,000 in a weekend, for what, right? So, but anyways, because I was going to recommend go to a conference, and if there's one nearby, but then you might find out they're all sales pitches. So, I'm good, right? But just find a way, Hassan. At least now you need to know. Now you know what you need to know. The biggest thing in the beginning is finding out what you don't know and what you should know, because then now you can find a way. Right? Now you can find a way. So I believe that's helpful. But anyways, down, 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 up, up, sell, right? Down, 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 down. So this is 1 hour. It could be 1 minute. It doesn't matter, guys. 1 hour, 1 minute, 5 minutes, 15 minutes, doesn't matter to me. When I'm down here, I'm trying to get a better color. Okay. When I'm down here, I'm going to look left, and I'm going to say something in the future. I'm going to sell around that price. It might be a little higher, might be a little lower, and that's what they call Fibonacci. Now, Fibonacci tells you to sell, somewhere between the 382 and the 618. Okay? And I agree with that, except that is completely stupid. Again, some guy 100 years ago said, I'm going to sell an expensive course to amateur traders and get them to buy it. And I need to sound smart. So I'm going to pull some weird mathematical equation out of the book that no one's going to understand. And I'll say, see, the math and the science proves that if you buy somewhere in these, in the Fibonacci, the golden ratio, you'll be much more profitable. By the way, CPI coming out, right? Why couldn't you just buy somewhere between the first third and the second third? Ideally, somewhere in the middle, which is 50%. Anyways, let's move over. We'll come back to this. Remind me. Simple price action, though, guys. Just simple price action. It's CPI today, isn't it? Yeah, Barry?
Prior weekly earnings year-over-year at 0.4%. Jobless claims.
So dollar a week across the board. Nobody saw it coming except us.
1.79 million, just below 1.8 million expected. Canada did not at 0.0%. The month is in line with expectation. Year-over-year in line at 2.4%.
Okay, I want the core. What was core? I got all kinds of news coming through. We missed core? No. Yeah, a miss on core. So it seems that the little bit of inflation that we have, where's my year over year? That's month over month. The little bit of inflation that we do have seems to be the higher oil prices. Where's my year over year? Jeez. I only have month over month. Oh, there it is. Year over year, 2.5 versus 2.5.
Interest rates are moving lower following the CPI figures.
Where's the core?
Dropping about 3 basis points now to
2.1 versus 2.2. All right. 2.1 versus 2.2. That's what the world cares about. So we're about 2%. Okay. 2.1. So it kind of keeps the Fed on path, but they're not going to speed up. Remember, the inflation target is approximately 2%, so we're at 2.1. So we definitely don't need to be accommodative. The headline number being higher seems to be most focused or most influenced by higher oil prices, which we actually talked about, I don't know, a month ago, right? Because we assumed oil prices were going to go up. So I said CPI is going to go up, and that's going to keep the Fed raising interest rates. But then you take that out, which is the core. You take out volatile oil prices and volatile food prices, but food is practically free, ask any farmer. So what we really mean by core now is oil prices. So oil prices go up, it's going to drive up inflation. But if it's all oil prices, we want to try to exclude those and see what everything else in the basket's doing. And everything else in the basket is about what we want it to be. So we need to normalize, but we don't necessarily need to raise. What does that mean? Well, we have to raise interest rates to get back to normal rates, but we don't need to go higher than normal so far. But we do need to get to normal soon so that inflation doesn't get out of control. Okay? And so what you could do is go back, let's say 12 years ago. I'm picking a random date, 12 years ago. Look at the yield on the 10-year T-note, and then look at inflation levels. Look at core CPI 12 years ago. And then look at the spread between the two, right? If, let's say, if core CPI was at 3%, right? And the 10-year T-note was at 5%, the spread between those two numbers is 2%. So right? And you might also then want to take a look at the Fed funds rate and try to see the relationship. Where was the Fed funds rate? Was it 2% above the CPI rate? Or was it near the CPI rate? Well, we know interest rates were much more like 5%, right? So you want to take a look at those and then see if you can learn anything. Okay. Core CPI year over year was 2.1 versus 2.2 expected. So how do you like them apples, guys? Do you remember how I talk about, you know, and I do this a lot in like NFP, that people are freaking out about the news and they're reacting to the news and now they're trying to trade this, right? Now they're trying to they're trading in this candle. And of course, this candle is going up and up, and then down, 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 and then back up. And people are making and losing quite a bit of money, actually, especially if you look at the aggregate, right? And what is it that Wayne McDonell and TradersWay is trying to teach you? That we were aware of scenarios a week ago, 2 weeks ago, that could create a complete change in direction. And that we were expecting around 118.25 for this to possibly happen. We don't know if it's going to happen, but we know that that is the price it's likely to happen. So shouldn't you be long like that first circle or that second circle? And we were talking about that last week and even the week before. Okay. You know, but you're buying. Yeah, the way, Hassan, that you described it, it sounded like you said buy, and I think you said above or whatever. But yeah. So what you want to do is you buy at support, and using like a stop or limit to get in, I think is irrelevant. I typically just buy it, but yeah, you can put it down there, right? You buy a dip, right? But yeah, that's fine. Whatever. And what is it going to do now? Do you guys think it's just going to do this? No. No, it's not. Let's look at history. At best, wouldn't it look like something like this? But more likely, it's going to consolidate before it reverses, right? How does the Forex market reverse? Can you describe it in a memorable way? Like an old man easing into a hot bath. So that's down and up and down and up and down and then It's going to take a lot to convince all these bears. See, the Eurozone economy sucks. And the Fed is jacking up interest rates this year and next year. So don't you think a lot of people are thinking that? Europe still sucks. And the dollar's raising interest rates. So it's going to, yeah, they're going to try again. Where are they going to try again? Well, we have some pivots. Maybe these pivots. Maybe this cluster of pivots. Okay? Maybe your daily pivots. Okay? This is your sell zone and weekly pivots. Although it's Thursday, it's a little late. Okay? So a bear is going to look left and look right, and they're going to come up with a plan, and they're going to say, boom. So bulls might buy it back here. Okay? We don't know. But the hero part, where you become a professional, guys, and not just a reactionary short-term trader, is that we talked about this happening here on the first day of the month. I drew this X on May 1st. I drew it for the swing trading group. It might have actually been over in here. It might have been April 30th or something. That's the moneymaker. What's happening now? People are making and losing money. And probably very inconsistently. So whoever is making money now will lose it tomorrow. Don't worry about that. And whoever's losing money now might make it back tomorrow, but they'll probably lose tomorrow too. Yeah. They're not bulls, they're not bears, they're pigs. Yeah. They're just, right? They're just transferring wealth from dummy to dummy and back to the other dummy again, right? So we need to take you out of that and start with this, right? So now we're looking at monthlies. So now what do we need to do? If you're a bull, well, now you have price action. You have a higher high, so you're allowed to start thinking about buying dips now. Okay? So maybe you buy a dip here tomorrow. Okay? But now you also are thinking, well, I wonder what's going to happen next week. Am I going to get if it makes a higher high, it's going to move these things. Is this area here going to be the buy zone for next week? Okay, and if so, where's the target going to be? Probably up into here. So we know next week we're going to challenge this. Well, I can tell you already that there are going to be bears there because there's going to be a fib to reckon with. So this might go all the way up to this price, 120, let's say 120.50 next week, and drop this all the way back down. Okay? Because we know, we said here it's going to take a lot to reverse this market to go back up. So doesn't that mean it should go up 200 pips and then come back all the way down 200 pips and do 200 pips up, 200 pips down over the course of 3 weeks? Yeah, maybe. See, you're thinking. Yeah. For the drumming, yeah, that's Metallica. I don't think you can hear the drum on though. The guy's working on our basement. They're like, what the hell is this guy doing? Hey, what's up? Wow, wow, wow. All right. What are you talking about, Joe? What are you talking about, Joe? Nice young Scandinavian men? Oh, I thought you were, yeah. Well, I should type that into Google. Images of nice young Scandinavian men. Ooh, yeah. Yeah, well, they're actually from Berkeley. Yeah. Well, except Lars, but yeah. I think Kirk was from LA. All right, so some price action, some pivot points, multiple time frame analysis, planning your trades in advance, and having a bias. Kind of seems like what we do every day. But isn't that what we're supposed to be doing every day? Isn't that actually what we're supposed to be doing as a career? Yeah. And I'm telling you, I've been doing this a long time, but I still love it. Like literally listening to Bloomberg today as I'm in the shower, sitting on the floor, drinking energy drinks, meditating. I got a lot going on in my shower of power. And they're like, wow, dollars weak It's losing value against all G10 currencies. First time in a month. And I'm like, yeah, like we said it should. 118.25. Like, think about that. The accuracy. And remember, it's not me. It's not I'm a genius. I'm a supermodel. That's factual. But a genius, I'm not a genius. But we did say 118.25, right? On the last day of April. And that's the exact bottom. And that's surprising to a lot of people. Dang, you know, like, isn't that cool? I think it's cool. I smiled ear to ear when the guys on Bloomberg are like, holy crap, it came out of nowhere. Like, yep, we got something good, right? We got something good. There's some good sauce, baby-like sauce, right? This sauce has meat in it, and I like that. This is something really, really good. It brings joy and happiness to me. And I hope it brings joy and happiness and wealth to you. Just raw sauce. What's that first one? Oh, no, you mean the stuff we use to get CPI so quickly? That was tradethenews.com. Oh, yeah, over here. Oh, this thing. So this one, that's Bloomberg Television. And this one here, that's CNBC. And the coolest part of running those is that I turn the sound off. I don't listen to them. That's the last thing I would want to do. I mean, think about it. People are surprised euro dollar is bouncing at 118.25. Why would I care about their opinions? And they're lying anyways, right? They want to sell you the stock they want to sell, right? So Wayne, are we going to start seeing euro strength across board? I have no idea, Howard. I have no idea. But Howard, if you think that that's possible and you'd like that to happen, then you should start doing it. You should start buying dips, but you should also identify levels of resistance in which bears are going to try to take over. And there's going to be some fight. That's why I said I think it could go up like 200 pips and then come all the way back 200 pips. So even if you're up 200 pips, it's still a battle. And bears are going to sell again because they did well in the last move. And nothing's really changed. Europe still sucks. The Fed's still going to continue raising interest rates all the way to like 3.0. So you know well, not for a fact, but you should expect that those dudes are going to do it again. Those ladies are going to short euro dollar. Why wouldn't they? So you should use that as part of your analysis. Know when to take your profit and decide now whether you should swing both ways like a broken gate. Should you be buying the next week or two up to that level I showed you, and then at that point start selling again? Are you short-term long but long-term short? Then write that down. Don't do it as a whim. Right? Imagine you had to give me a short presentation on what you're going to do over the next 90 days. Or even, how about this, over the next 30 days. You'll say, well, now that we hit this, over the next course of time, I think it'll go up for a while. And then at that point, because nothing has actually changed, in the macros, that I would like to then start selling euro dollar again. Imagine you had to tell me in advance. What's so difficult about doing that? That's what you need to do, is decide that ahead of time. Everyone else is just reactionary. So what will happen is it'll go up 200 pips and people will start buying it. And they'll lose money because they deserve to lose money. We need them to lose money. Put it this way, you want to sell euro dollar after a 200 pip rally, where are you going to get the dollars? Someone has to be long the euro dollars, which means they're long euro and they want to sell the dollar, and so now you want to buy the dollar and sell their euro. You need to be the opposite. So you need someone to buy way up there so you can take the other side of the contract, or in this case, the spot price, right? So some idiot's going to have to sell. Some idiot's going to have to buy it up there for you to be able to sell it up there. So don't worry, there's plenty of idiots. They're going to pay your mortgage for you. Right? Great. Yeah. Ask Mike. Mike used to be an idiot. Mike's an ex-idiot. Yeah. And Katie, I was that idiot just a while ago. Yeah. Yeah, I should write a book. I should put this down. Yeah. Well, I think it's an important thing. Imagine my book will be in the Library of Congress after I'm dead. And at least, when I get to the pearly gates and who's at the pearly gates, St. Peter, I have to get in and convince him. I'll say, look, I found something that works, and I've shared it with the entire world. I told you this stuff 10 years ago. I told everyone this 10 years ago. I've been telling people every day for 15 years. Imagine that. Talk about an evangelist, huh? I've been telling you this stuff every day for 15 years. My strategy hasn't changed. Right? It's pretty powerful. So hopefully you take advantage of it, and you can get filthy stinking rich, and it'll be fun. It'll only take you blood, sweat, and tears for years. Yeah. So anyways, hey, got to go. Peace on earth. May the pips be with you, and may your profits be above average. What day is it tomorrow? Friday. Hey, do you want to get together tomorrow and talk about trading Forex? Well, cool. Why don't we do that? Let's meet, I don't know, how about Forex.Today? You want to meet up Forex.Today or 7:30 in the morning? It's about London lunch, couple hours before stock market opens. Hassan's like, yeah. Yeah, if you didn't get it, Hassan, we meet every day at that time. Yeah. No, okay, good. You're silly, Hassan. So, yeah. Yeah, we'll listen to some deep house. Oh, slightly. Oh. Yeah. All right, so I gotta go, guys. Peace on earth, may the pips be with you. May your profits be above average. I will see you tomorrow. Hey, how you set targets when you trade a trading range? Support and resistance. Yep, that's it. If you're buying at support, your target's resistance. It's not going to break. It's range bound. It's not going to break. Then you sell at resistance. What's your target? Support. You're range bound. Support's going to hold. It's not going to break. And you do that over and over and over until it does break. And you'll say, holy smokes, it broke. I guess I'll buy the dip or sell the rally and that good stuff. See you tomorrow, guys. Thank you for all the awesome questions, and thank you for being a fabulous client of TradersWay.com.